What's going on, everyone? Sorry for that delay, but here we are.
Sorry, we were just talking shit behind the scenes, and time gets ahead of us. So, welcome to Tuesday night. BTC to fill or not to fill. Here we are, and man, we've been speaking about this for a few weeks now. Even going back to where you can see at the top of where ads has drawn that fibs from where we had that second bearish retest of that diagonal line that we've had drawn up there, and not probably admittedly maybe not as quick, but not really surprised to be at this point. Last Tuesday, I vividly remember us saying that the battleground from 12 was going to be 10.5. Anything below 10.5 was going to be concerning in terms of having this BTC gap fill. We haven't quite had that major gap fill at I think it's 9630 that we're waiting for, that a lot of people are waiting for. Thus far, we've had that double bottom on that demand zone above 9.8 there, so that 9.850, where seemingly that gap has been front run to this point thus far. But where we are now and where we're looking at, if you've seen that supply and demand zone that we ran a few weeks ago, looking at how we penetrated into this demand zone now, you would seemingly say that this demand is toast. And if we revisit this again, there's every likelihood that next demand below between 9.4 and 9.650, which would line up very well with our BTC gap, is likely going to be filled ads.
Yeah, absolutely. And we'll have a look at the actual CME chart immediately after this, but I'm in very much agreement with that sort of sentiment. This demand here has been eaten up multiple times now. We've had 2 touches, 3 touches, 4 touches, and the 2 last occurrences. Obviously, these 2, I'll count this one as one. However, the last 2 occurrences we've had at this level says a lot to me. One, we're eating up most of the liquidity there quite quickly, and 2, the reaction off this demand seems to be quite weak. And we're looking at the UTG volume indicator down the bottom there, and we are seemingly heading down. And I'll turn the MA on there that you can see a representative of that continuing dwindling volume. So not a lot of buying happening at this level in terms of significant volume into maybe accumulation. Accumulation, absolutely, because that's what I'm doing. However, but no bullish really spending happening down here.
Totally. And I just sent you a link, ads in behind the chat, and we've spoken about this many times, and this still fits with our narrative that we've been speaking about for like, how long we've been talking about this now? For like a month and a half, 2 months almost, since this, what we identified was this accumulation phase before this markup. We said that unless we get a break above 12.5, or we range between that 12.5 and that 10.5 level, if we get a break below that, it would still fit in with our narrative of distribution. And in my opinion, we've had it. That is distribution. If we go down the page a little bit further on, ads, looking at the phase at where we are now is still a little bit up in the air. You would argue that we're potentially in this sort of phase D now, where we've had these obvious sort of signs of weakness. We've had these last points of supply. We're kind of now seeing that first sign of weakness within. If we scroll down just a touch, ads, we're in that right there. If you just stop right there, where we're in this phase D now, where we've seen these. If you go back and watch the videos, I'll quickly touch on accumulation for you, and maybe we could do this in one of our monthly classes. If you'd like to see that, let us know, and just let us know in the Discord. When we have anytime during a markup phase, or an accumulation phase rather, or a distribution phase, we have these tests. And like what Ad said a moment ago, where we test liquidity, we're either testing the selling reaction, or the buying climax, or we're testing sort of selling climaxes, or capitulations, if you would. We're testing to sort of see where liquidity is, how the reaction to certain points of demand are, where buyers are sucking up all of that BTC that's being distributed by the whales. We kind of see it where we had that double bottom. We come down, we test demand, it eats up that little bit of liquidity. We get a little bit of a run up. People get very excited. We have this last point of supply before we have this another run back down and the double bottom, and then where we are now, in my opinion, is in this phase D, where again we're testing these. I guess where you see the two support lines there, where you've got the LPSY, you've got the LPSY, the SOW, which is the sign of weakness, and those support lines, which would kind of be our demand zone that we're sitting at the moment. So we really need to defend this demand zone, in my opinion. If we either go back down and fill up that BTC, that CME gap, and we continue to run back up, and then maybe we might be in another accumulation phase before another potential markup, which is similar to where we were before this first markup phase, before we were in distribution that we spoke about a couple of months ago. Or we eat the CME gap, we maybe have a little bit of a bounce there because there's a lot of liquidity around that zone. Lots of people have got buys set around that 9.6. We hit it, we start running back up, maybe towards that sort of 10.6, 10.8 level. Everyone gets very excited, and then bang, we dump again, and we head back down towards these new lows for this phase that we're in now. So where we are now, this kind of confirms my distribution thesis that that whole area that we had above us was simply just a distribution into everybody getting very excited post-halving. Everyone's in this real bullish sort of moon boy phase. Yes, we're post-halving to the moon, 12K. Yep, we've broken these monthly highs, like the highest monthly candles we've had in whatever since 2017. Everyone's there buying dips. To me, as a whale, that makes perfect sense. Why wouldn't I just buy, rather sell all the BTC that I've accumulated back down before sort of 3, 4, 5, 6, 7, 8, before the mark up towards 12K, and then just dump on your ass, and then you keep buying all of my BTC. It makes perfect sense, and that's kind of where we are now. So the next sort of zone to defend, in my opinion, is that CME gap. If we don't defend that, then as we've been saying for a few weeks now, I've got buys set all the way down to sort of low 8s.
Yeah.
Which would not surprise me at this point if we don't defend that CME gap. And looking at the fibs that AS has drawn there, that 27 extension is all the way back down towards 9.4, and that 61 extension is all the way back down towards that very, very bottom demand at what is that, AS? I can't see your screen; it's a little bit blurry.
8.7.
Yeah, at 8.7. So I've got, like I said, I've got buys all the way down to like 8.238 is where one of my lowest buys is. And admittedly, I've been buying all the way down here. I've just been averaging into positions, dollar cost averaging, buying here, buying there. Not massive amounts, but enough to keep me happy, where I'm happy buying cheap BTC. Because are we going to visit sort of 3K, 4K? Where everyone's thinking, the second we have like a bullish candle, everyone starts throwing up 3K charts. I don't think we're going to get to 3K by any means, but what would make sense to me is that this was a distribution phase, and then we could maybe even just go back into a reaccumulation phase between sort of 8.6 and maybe 10.5 maybe, or 10.3. And we could range between there again before another markup phase. Who knows? But where we are right now is really, really interesting. And I don't mean to ramble, but it's a very exciting time for BTC when you can sort of start to identify these phases before they kind of happen. Fortunately, I was in a short from 11.9, and I shut it off too soon at 10.38, and then I've not been in any position since. So I'm happy sitting on the sidelines waiting to see what this CME gap does. I've got buys down there, of course. The decision for you might be to have buys a couple $100 either side of that. If you want to dollar cost average into positions, like what Ads was saying in his updates, where you want to average in. Don't look to try and catch bottoms or tops, and that could be a good strategy for you. Sorry for the rambling.
No, all sweet, bro. You're looking at that CME gap would be very, very nice alongside this demand here at 9.6 to 9.4, as you pointed out. However, pending pending some market structure and some price action at that level, honestly, if I had to say, be as honest as possible, that 8,800 that we were looking at quite some months ago could be definitely on the cards. That is the strongest level. That is the highest quality level that we're going to see. It is literally untested since May the 25th. And something like that would be a fantastic opportunity for a longer term position, in my opinion, if we get there. But in any case, we'll move on to the CME chart. If you haven't used the CME chart before, it's a BTC 1 exclamation mark. We'll have a look at it on the 4-hour time frame. and that is the level that we're looking at. So this is the gap. It's from 9675 to 9930. We have tested it twice already, used it as a form of support, but it's the statistical likelihood is that we're going to, that we will fill it. The only thing that gives you mixed signals right now is the fact that steamroll is quite low, as is the RSI, as is CCI. So, in the midterm, you could see some sort of moves to the upside to even cool this off, or even moves to the right. But the way that the market structure is looking right now, even on the CME chart, we are just moving down in this sort of channel here. And moving towards that CME gap quite aggressively now. Like I said today in the Discord, we are quite fiercely moving towards that zone. And more than likely, in the next probably 7 days, I think we'll see it filled, even by Thursday night. So we can see that happening. But that remains to be seen. Look, it could go the complete opposite way, and happy to be wrong. But I think betting on that 9,600, 9,800 level being tested within the next few days to a week, I think that's fair to really say at the moment.
Yeah, and as we start approaching that, I'm looking at the BitMEX chart here, but that 9991 is going to be an important level. If we can close and break if we can close and break below, so let's say 985, we close and break below that, I would be very mindful of that gap filling. But also, hence the reason why I'm not in any long positions or any leverage positions at the moment, because I think any sort of gap fills that we have could be quite quick and aggressive. So I would much rather I would much rather just have spot buys in place, and rather than leverage buys, and wait for things to simmer a little bit, because they will simmer. This has been a great environment to be shorting, but I think if you're in short-term plays, you want to be very, very careful of your exposure, your risk, your position, how deep you are. And just be very, very mindful that things could get a little bit crazy as we start heading towards that gap.
Completely agree.
All right, let's have a look at the BTC dominance chart ads.
BTC dominance coming right at you now.
All right, just also as well for you guys, I've been using this. It's called Gap-O-Matic is the app. The indicator rather on TradingView. If you just type in Gap, it'll come up as one of the first indicators there. Gap-O-Matic. That's a really cool little indicator for spotting those CME gaps. They just pop up as these little red dots or green dots, and it's called a bear gap or a bull gap.
Yeah, and I'll have to flick it back over to BTC to see that.
Yeah, maybe. Real handy little tool, that one.
Absolutely. It's all right, we'll get that working another time. We'll have a look at the BTC dominance chart now. Not a lot happening, to be honest. I did have an update yesterday and I did look at, I believe, the BTC dominance chart, or that might have been last Thursday, but that's all right. Still moving along down this level here that we're seeing, this trend line. It looks like slightly we've broken out, and we're testing the top of it. If I look at the 4-hour chart, it might be a little bit more evident to see that. However, we're looking at pretty dismal price action. Mainly moving to the right. We're talking about mainly walking through this, or even this has got a very, very fair chance of coming back in and coming back down. However, it's really a catch-22 scenario when we're talking about the BTC dominance chart, and we're talking about BTC declining in value. So, because what really happens is BTC dominance will push towards the next level, for example, at 62.5, and then BTC will continue to decline in value, and then also the alts will continue to decline in value even further. The alts scenario is the reason why BTC dominance chart is moving to the upside. So it's really an issue, a thing where, like I said last week, don't put a whole lot of weight on drawing your TA on the BTC dominance chart. Yes, we look at it, and yes, we know that we can draw TA and we can expect moves to the upside or moves to the downside. However, if this TA is to be respected and we have broken out and we are testing the top and we do decide to keep moving up, more than likely we will see BTC start to decline in value as it drags, pulls the alts down with it. So a little bit, nor here nor there with the BTC dominance chart. Just make sure you're aware of that.
Yeah, and I've stayed the fuck away from trading any alts recently. Who was I talking to the other day inside the Discord? I can't remember what it is, but someone said, this is going to be a great time for alts or whatever it is. And I said, yeah, that may be the case for short-term plays, but you're far better off just waiting for things to simmer before you look to be jumping back into alt positions, in my opinion. Even myself, as someone who has sort of scalped a lot of alt trades in my time, I'm even still just staying the heck away from alts at the moment. I'm happy just to be playing in the USD pairs, being BTC and ETH. And just waiting for the right time to jump back into alts. Because once we start heading back into this potential reaccumulation phase with BTC, where we establish this range, we will see those little mini alt seasons again, like what we saw beforehand, where BTC settles, we start moving sideways within a trend, and then all your favorite alt pairs will probably start having moments again. Because that's sort of how it is. You trade alts to accumulate more sats to put back into BTC. And then vice versa. When BTC settles, you back into alts to keep accumulating more BTC. So just be very, very cautious of when an alt looks good. Just be mindful that it could be a very short term run.
Absolutely.
And 100%. Even coins with higher liquidity, altcoins with coins with higher liquidity, like BNB, for example, are having pretty crazy 4 hourly candle moves. So, and that's typically BNB is a coin that usually does pretty well historically when BTC has these moves. As we saw, the price action on BNB has been nice lately, but it's had very nice upside moves, but it's also had pretty violent 4 hour candles as well. So just be very cautious of that.
It's very volatile time, for the altcoins, and just trade with caution. That's all we have to say.
Absolutely. And be mindful that being in no trade is as good as any trade.
100%.
You don't have to be in a trade. Don't get into the habit of being in a trade, a losing trade, holding it, and then the old revenge trade mentality kicks in, where you feel like you got to make it back because you lost a couple $100 or a couple $1,000 or whatever it is. You'll make it back, but the worst thing you can do is revenge trade and get yourself into that mindset, because you will get wrecked even further. I can guarantee that.
What? How many times have we seen that? How many times have we seen that?
Way too often, and I've done it personally. Hell yeah, I've done it in the past many times as a beginner trader. I would lose money, be kicking myself. I'd be like spewing throughout the course of the day going, I lost X amount of money or whatever it is. And if I saw I remember I was in Mornington, this is probably 2.5 years ago or something like that, and I had my laptop with me and I'd pulled over on the side of the road because BTC was having a move. I had a pretty bad night or a day beforehand and lost some money, and I saw some price action. I had a couple of alerts on my phone, and I pulled off the highway to revenge trade to try and make money back, and lost even more money on a trade, like a 10-minute trade. So, as someone like myself and ads as experienced traders rather, we have even still fallen into that trap. So the best thing you can do is just walk away, get your head right, and then get back into the charts when everything's settled and when your mind is settled.
Absolutely.
All right, let's get into it. ETH/USD, what's happening, ads?
ETH/USD, don't hate me for this demand zone drawn here. I'm completely aware it's not drawn correctly. However, I'm just using some of this price action to see how big the zone should be. With Ethereum USD, we have been looking at this candle in particular for quite some time now, and pending moves to the downside, we were looking at this pivot here with some of these retests, but however, we did when we did come to it, we did smash through it straight away, and that was the real premise. That was the real ticker. It was the golden ticket to really say that we were going to smash through it pretty easily and head to the next one, and we have. 322 is where we're at right now. A respected demand zone for now. Do I think Ethereum is going to head more further down to the downside, or a little bit further towards some bearish territory? It's an interesting one, and it's an interesting question. Oh my god, all over the shop right now. And the next zone that I would really put for ETH, and it's quite broad, would be $250. Do I think it's going to get to $250? It's got a lot of room on the steamroller indicator for that. Admittedly, it does have room for that. The RSI does have room for that also. CCI is a bit of a lost cause there in terms of what the position is for this for ETH. I would expect some resistance here, or some support at 320 to be held for Ethereum. But with all that's going on with ETH, with the chain not being able to handle the current traffic that it's carrying, and the astronomical fees that the chain is charging for transfers at the moment, it could see that $250 mark, honestly, for ETH. And it's a bit sad to say, because it is, and probably still is your main pick for this year, Ty. But it's a little bit stretched in terms of what it can do right now.
Yeah, definitely. And the major levels that I'm looking at really for ETH to hold is around this 320, 322 level, where I think we might see some sort of consolidation where we previously in the past, I'm looking at the Bitfinex chart, by the way, on the 1 day chart, we did see a little bit of a hold up between sort of 330 and 320 for a little bit there. Looking at our MA fan and the Ichimoku as well, we really need to hold this, let's say, as low as 320 we need to hold, and then from there I still have buys set down to 281. 320, 300, 281.40 is where I have my lower buys set, which do match up quite well, not surprisingly, with our MA fan. So our 200 MA on the 1 day Bitfinex chart currently sitting at around 274, but obviously keeping in mind that that's dynamic. It moves. It doesn't stay stagnant as price continues onwards. So we can see we've had a couple of little double touches there around that 320, 322 mark. That needs to hold. Otherwise, as I said, 300, 280, 281.44 is where I'm looking.
I think that's very much possible, to be honest.
Totally, and it's a semi-sad demise for ETH. Seeing what we saw, that 485 mark was a stunning move for ETH all the way down from 230. I remember us charting and talking about how excited we were at ETH at 223 way back, whenever the hell that was, ages ago, back in February or March, and it had this monumentous run. But in the scheme of things for ETH, even the move to the downside that we've had now currently is not it's not massively terrible. Like I'm not
still healthy.
I'm not pessimistic on the market as a whole yet. These moves are pretty dramatic, and things are sort of shitty right now if you bought the top, for sure. But I'm not overly concerned about this. If we head back down towards that 250 mark and break down below that, then I'll definitely be quite concerned. But right now, I'm happy to continue buying all the way down to sort of 240, 231 is my last buy on ETH, and then below that I will start getting concerned. But at the moment, I'm happy just accumulating and buying more ETH as we drop. It just means cheap BTC and cheap ETH for me, which I'm quite happy with.
And 100% in the same boat as you, bro.
Shit, yeah.
100%. That 250 mark, that 248, 250 level lines up very, very well with some liquidity and some structures to the left-hand side. It lines up very well with this cloud support that we see here on the top of the Kumo, and it is the highest quality level for Ethereum that's lined up in terms of demand zones. This level here, this daily level that we were looking at on the 4-hour time frame, is midway. That's a low quality midterm supply zone. Demand zone. So this level here isn't going to be anywhere near as strong as this $250 level, and more than likely, if we're talking institutional, professional, big whale traders, this is where you want to buy ETH. You want to buy ETH at $250, 100%.
Definitely.
Back to the scene of the crime. There's a lot of liquidity sitting at $250, and this level is the highest quality. So if you don't have sync bids set, if you don't know what sync bids are, I suggest you jump in the Discord and learn what sync bids are. But it wouldn't be a bad idea on Ethereum. That's not financial advice, but that's just what I'm doing.
Hell yeah. All right, let's get away from crypto ads. DXY, what is going on in the market at the minute? And also, obviously, this is a regulated market. This is not financial advice. We don't claim to be financial advisors. You should not be listening to anything that we say when it comes to investing into anything. Purely just educational material, a little bit of TA for y'all.
100%. All right, so the DXY. Now, we were caught up the other day on this trend line here, and some very, very, very volatile moves for the DXY coming up against this trend line and against this level of liquidity that we see just on the left on the 38.2 fibs. And we've finally done what I think we were going to do. Even late last week we were speaking about this, is that we were going to test this supply zone here, admittedly destroyed supply zone here, with a lot of price action to the left, smashing through this quite easily. And we are seeing this right now. As we are live, we are pushing through this level at 93.4. The next level would be 93.82, 93.83. That's the next level of supply. It's the next one that we've tested multiple times and will close directly underneath it. So it does exist, and it is quite liquid there at the moment. So that 27.2 fib, that negative 27.2 fib extension lines up quite well with our fibs that we've drawn from swing high to low. So that's the place that I'll be looking for, 93.8. And if you flip this on its head, if we're looking at something like gold, then we would be looking at something complete opposite. We'd be looking for targets to the downside, or areas of interest to the downside for gold. And on the 4-hour time frame, there's not much to go off. If we're looking at these levels, these trend-based fib extension levels that I've got drawn in, which is, if I have a look just to the right-hand side, it is quite far away. So the next one's 61.8. So that's the level that's really going to be interesting when we see gold. We could see gold back down at this level at the 1860 mark, and that would be that would be a pretty heavy level, or pretty heavy drop from where we are. If we're talking percentage wise, that's a 3%. If you're looking at most traders looking at 100x accounts, that might not be a bad opportunity. However, there's quite a bit of wicks just to the downside here. I know this level of demand is broken now, so we can get rid of that. But there's a few wicks and bits and pieces just in the meantime. So I'd be very, very wary of this area, and I'd be very wary of this 78 Fibonacci level that we're currently sitting on. Reason being is that we've got Steamroller, CCI, and RSI, faring towards that lower region, and we know how good these indicators work on this sort of market. So I'd just be keeping that in mind. And with silver, to conclude our session, not a lot happening with this, to be honest with you. We've been really observing this demand here formed off this falling wedge when we pushed through it. So a nice zone here, and admittedly a pivot, or arguably a pivot, should I say. But we're really just moving to the right. It's not really falling victim to the same sort of price action as gold. And that's quite good for silver. But we have seen a lot of decreased volume with this, especially on Awanda, but more than likely every brokerage is going to be exactly the same when it comes to silver. I'd be looking for this to hold, to be honest. This price action looks like it's quite good, moving to the right and not giving us a lot of selling pressure. We have, on this immediate reaction coming down from this price action. We have tested this zone a few times now, but since then we haven't had any major moves to the downside. If we do, more than likely this 88.6 Fibonacci level is going to be the first thing to be tested, like it did just here on the 4th of September, which was 4 days ago. So I'd be looking for that level to hold first, and then if pending that, we could fall all the way back down to this 25.24. In terms of fall, that's exactly the same as gold at this 3.6% mark. So I'd be waiting for confirmation on this demand to be broken before making any drastic moves on silver. But yeah, that's really all I wanted to speak about. Make sure you like and subscribe to our YouTube channel.
Please.
Helps us out a whole lot. And if you haven't already...
Absolutely, but at the same time too, if you do subscribe, you get instant updates when we go live on Tuesday or Thursday nights, when Ads posts all the incredible content he's been posting as of lately. If you look at all the daily updates we've been posting over the last week, you would have made some pretty good money just by looking at a 10-15 minute video. Ads has done an incredible job over the last week, so kudos to you, my brother. You've done an amazing job on that. Amazing content. You'll get access to everything that we share, and it's for you guys too. This is to help you become smarter, more confident, more profitable traders, and it's 100% free. So go ahead, smash that like button and subscribe to us. We've got a ton of content coming in the next weeks and months, and we're really enjoying posting this daily content and these daily updates and these weekly updates. So go ahead and subscribe. It could be a very good decision for you if you're looking to boost your confidence as a trader.
Absolutely. And don't forget, if you're not involved at the moment, head over to unitradinggroup.com, instant access to have a look at our indicator suite, and join the Discord if you haven't already. Join the conversation. There's a lot of fantastic personalities in there at the moment. So yeah, really happy with how everything's panning out for us. But thank you for joining us on this Tuesday night, and we'll see you guys, or I'll see you guys tomorrow morning, Ty, and Ty will see you on Thursday. But thank you all for joining us again, and we'll see you then.
Thanks a lot, guys. Take care. Bye-bye.